Hello dear crypto friends, and welcome to today's video in which we are going to take a closer look at the theory that Bitcoin is right now in an expanded flat correction. We have said quite a few times already on this channel that Bitcoin might be doing an expanded flat correction. So we are going to take a look at what an expanded flat correction is and what Bitcoin is probably going to do based on this assumption and when this assumption is going to be invalidated. We also would like to know when we have certainty that Bitcoin is not doing an expanded flat correction, but Bitcoin is doing something else, right? So let's get started, friends. As always, we start with a long-term logarithmic trend channel. And the trend channel, for the new viewers, is currently probably the best model we have to model Bitcoin's long-term price behavior. It's probably the best model we currently have because you can see it's respected the boundaries for quite some time now, going back all the way since it started trading in 2010. The upper line we can say is the resistance line. So when Bitcoin reaches extreme overvaluation, it goes towards the red line. When it goes towards the green line, we can say Bitcoin is really undervalued. And the yellow line would represent something like the median value or fair value, if you will. Now, my current theory is, and friends, that is just a theory. So always please keep in mind that I could be wrong. As any YouTuber, by the way, as any analyst, we cannot foresee the future. We can just try to make best guess assumptions based on data sets we currently have and based on indicators. So my theory is that Bitcoin is actually doing an expanded flat correction right now, and we will soon go into a wave 5. So basically that whole structure here since late 2018 has been one giant bull market, but it is so stretched out that we don't realize it anymore as being a bull market, because we have said quite a few times that the cycles in Bitcoin are getting longer. If we take this low and go to the peak, 248 days, we go from this very low to the peak, it's already 751 days. And if we go from this low or this low to this peak, it's already 1080 days. So we can see the cycles are getting extremely longer, 248, 751, 1080 days. So it's not unreasonable to assume that if we continue this trend, the next cycle is easily well over 1000 days long, possibly 1500 days or something, right? 1500 would bring us, for example, to the top in February 2023. So we say that this cycle is an even more stretched out version of this cycle or this cycle. Of course, every cycle is a bit different. Bitcoin cannot just one-to-one repeat what it was doing before, so every cycle will look a bit different. But the theory is that this cycle is just an even more stretched out version of the previous ones. That is the basic underlying theory. Elliott wave theory says that an asset does a 5-wave structure on its way up, right? And we can also apply this to Bitcoin. Consequently, we say the first cycle was 1, 2, 3, 4, 5. The second cycle was 1, 2, 3, 4, 5. The third cycle is a bit more difficult because we have so many intermediary peaks, but maybe 1, 2, 3, 4, 5. And then consequently, we of course also say that this fourth cycle is also a 5-wave structure. So that is the basic underlying theory, okay? Now we have understood the underlying theory. Now, if I say that Bitcoin is in an expanded flat correction, this means that Bitcoin is currently right now in this wave 4, and wave 4 corrections typically tend to be very long and stretched out corrections that often resemble bear markets. Now, if we go into the Elliott wave theory and we want to understand what kind of conditions need to be fulfilled for a correction to be called an expanded flat correction, then we see that certainly a few things need to be fulfilled. So here are the main Elliott wave rules for ABC expanded flat correction. So ABC, what does that mean, friends? That means that this here is A, B, C, right? This whole move would be an A, B, C type of move. Then the expanded flat correction subdivides into 3, 3, 5 internal wave patterns. So that means we can subdivide this ABC correction, this wave 4 correction, we can subdivide it into even shorter impulse waves, into even shorter waves. So this would be 1, 2, 3, another 1, 2, 3, and then we would have a 5 wave down. 1, 2, 3, 4, 5. So this would be the Elliott wave count. It looks a bit not so visible, but that is the basic theory. So now we would of course like to know, has this been the low according to Elliott wave theory, and when is it invalidated? Well, friends, I have some bad news for you, because Elliott wave theory is not really helpful for us, because it says wave C tends towards 162% of the length of wave A. So the length of wave A would be this here. So when it says it tends towards, means that it can reach, in an extreme case, 162% of the length of wave A. And if we now just delete everything, right? And wave A we said is this here, this thing here is wave A, then taking the low point here from June 2021 to the highest point, this would be the whole move of wave A. We expand it to here. Then we say if it tends to go to 0.618, to the 0.618 extension, that's what it says, 0.618 is the 162%, then it would tend to go down to $6,400, which is of course an insanely over-exaggerated scenario, because Bitcoin does these extreme moves and we cannot take Elliott wave always too literally. Also, something to keep in mind is that the people of Elliott wave theory are not always agreeing with each other, right? I'm not an Elliott wave expert by any means, but I'm just interested in it. I see it as a tool like any other. For me, it's an indicator, a tool like any other. So I'm always quite careful with some theories. If you find people who say like Elliott wave theory is the best, it always works, it never fails, this is for me like a bit like a cultist behavior, okay? It's like you always have cultist people, they will say this is the best, it always works, it never fails. You have it with everything, so I'm always quite skeptical of that. For me, Elliott wave is a tool, and as a tool it can be right sometimes, but it can also be wrong sometimes, it can also fail. Here, for example, we have the Fibonacci relationship on another side. It tells us that wave C, so this lowest point here, can be 123.6 to 161.8% of wave AB, okay? This is now this wave here. So we go back and then we make our Fibonacci extension levels from this low here, because this is wave AB, right? Wave ABC. And then we get the 1.236 extension, which corresponds to like 123.6%. And we have our 0.618 extension, which corresponds to $4,000, which would correspond to this 161.8% of wave AB, right? So Elliott wave theory is not really helpful, because it says that this correction tends to end somewhere here. Oh, thank you very much. So between 19,400 and 4,100. That is of course an insane bandwidth, but as we can see, 4,100 would lie well outside of our boundaries given by the long-term trend channel. And this long-term trend channel is no joke, friends. This has been respected since back in 2010. So this is not something that would easily break, and not in such a profound and exaggerated way. This would invalidate the whole channel. So I think the worst case that can happen is that wave C ends at the 1.236 Fibonacci extension, or shortly below the 1.236 Fibonacci extension. And what is there? What is there? Oh, look at this. The long-term weekly moving average 200, so the long-term moving average of 200 weeks, corresponding to 2030 days in the daily chart. So this of course would mean that in one case we would actually see another leg down to this weekly moving average of 2030 days, which also corresponds to the weekly moving average of 290 weeks. And why is this so important? Well, because this is the moving average where the COVID crash of 2020 has brought us down. So this was one of the lowest that Bitcoin has ever been, and it was exactly on the green line of this long-term logarithmic trend channel. Also, if we prolong that line here, it would have hit it perfectly here in this crash in August 2015, and probably also here in this crash in early 2015. So this is a super important long-term trend line. Now, according to Elliott wave theory here, it says, well, wave C ends between 1.236 and 1.618 Fibonacci extensions, right? So this is between the 1.236 and 1.618. So this would qualify as spiking down, similar to the March 2020 crash, all the way back to the weekly moving average of 290 weeks or 2030 days. But will this actually happen? Well, this is of course the question now, right? How do we count this? Because it said here this needs to be a 5-wave move down, right? How do we count this? We can say 1, 2, 3, 4, 5, right? Then it has been it and we are going into a nice rally. But if we say no, this will go down even further, then of course we have to count it differently. We have to say 1, 2, 3, 4, 5, right? Something like that. This means Bitcoin would creep up now, make us hopeful again, make us think, oh, this is starting to look nice. And then bam, it goes down all the way to the MA 290 week moving average. This would be, of course, very insane and we wouldn't like that. So we are not getting really helpful answers from Elliott wave theory, because Elliott wave theory just says, yeah, friends, this correction could be even more insane than it already is, and we could still be in a wave 4 correction. We could go down all the way to 18K and we would still be in a valid wave 4 corrective structure, because wave 2 was so low, and then wave 5 would bring us from around 18,000 to around 200,000. So this would still be possible, technically. So Elliott wave theory is not super helpful in telling us if this already was the low or not. But if it was not the low, then we can assume that we would see something similar happen to March 2020, that after we go down, we would see a recovery that probably would take a similar length as it did here, because we went in a time span of 1.5 years, right? From March 2020 to April or May 2021. So actually not even 1.5 years, a bit more than 1 year, 13 to 14 months. We would go in a time span of 13 to 14 months, say from July or August this year, when we would hit this low to the top at around 180,000 in August 2023. So this would be the picture if this has not been the low. Unfortunately, as I said, friends, Elliott wave theory is not super helpful. We could go lower, but this could have already been it, and we creep sideways now and go directly into a rally. So in order to determine if this really was the low or not, we have to, friends, look to different indicators. And one indicator is, of course, the volume. The volume looks as if this spike has already been a nice shakeout. So it's almost as high as the other shakeout spikes, but not quite as high. So could this go even lower? Could we go down here and then go into the next rally? Well, sure, of course. Why not? It is always a possibility. Also, interestingly, Elliott wave theory doesn't tell us a lot about time frames. It doesn't say, oh yeah, this wave has to be so much longer than the previous one, and if we stay too long in this wave, then it is invalidated. It just tells us about price levels, right? But it doesn't tell us about time levels. So also not super helpful in order to determine if we are still in this expanded flat. When would we not be in the expanded flat anymore? Well, I think if we would now go sideways for 1 year, we can be pretty sure that this scenario would have been invalidated, right? So we should keep in mind that this could have all been just a setup, and we could just go down lower to the lower bound of the long-term trend channel and then actually go directly into a brutal bull market that would last well into 2023. But of course, as viewers of this channel know, this does not depend only on Bitcoin, but Bitcoin is super correlated to other assets, to the Nasdaq, dollar index, and so on. And if we, for example, look at the dollar index, we see that the dollar index went into a full parabolic move and is now correcting. So it will, of course, depend on how much the dollar index is coming down. Is the dollar index doing an A, B, C type of correction? How low will it go? Will it be a longer stretched out correction, right? Will it be something like this? Or what will it do? And this, of course, will again depend on the 2-year government yields and many other factors. So my goal on this channel is to look at many different indicators, the correlation of Bitcoin with other assets in order to determine what Bitcoin will be doing. Because just looking at Elliott wave theory is a nice tool sometimes, but it's not what some Elliott wave fanatics want to tell us, that it's like the best tool ever and is never wrong. Friends, always be skeptical of when people tell you that something is always right and never wrong. Every tool, every indicator fails sooner or later in some degree. For example, this long-term channel here would have told us that, oh yeah, we will reach about 110K in 2021. But we didn't do it, right? Bitcoin just did something else. And the same way that we didn't reach this top here, we might now not reach the lower bound of this channel and might go directly into a rally from here. Or we could bounce now and then go lower because we said it would still be in line with the Elliott wave expanded flat correction. And then we go into a rally. So friends, it's quite uncertain what is happening, but I'm inclined to believe that the correction is over, and I have spoken about it in the previous videos why I think this, because of the correlation to the Nasdaq, the dollar index, 2-year government bond yields, and so on and so forth. I don't want to repeat it again, but of course also a strong indicator is, friends, that we still have this super brutal bullish divergence in play here. We have lower lows in the price in the daily chart. We have higher lows in the RSI. This is a strong bullish divergence over longer time scales. So this makes me still pretty bullish, to be honest. And I think the likelihood is very high that we have already seen the correction and that we will go into a new rally directly from here. But as always, I could be wrong, and Bitcoin always has some surprises for us. And as we saw, Elliott wave theory says that sure, no problem, we could dump even further and it would still not invalidate our expanded flat scenario. I hope you found this video helpful or interesting. If you did so, please like and subscribe. I would be happy if you would do so. I would welcome you on this illustrious channel here, because I will try to make daily update videos on Bitcoin, on the crypto market, on stocks in general, on the whole relationship between Bitcoin and the stock market and the dollar index and so on and so forth. So we will look at many indicators and try to find out what Bitcoin is most likely going to do, friends. I wish you a nice day and see you in the next update video tomorrow. Bye.